Alright, so let's talk about short-term crypto trading. Think of it like this. You're getting on the biggest, fastest, most unpredictable roller coaster at the amusement park. It can be incredibly exciting with massive climbs that take your breath away, but it's also super risky with drops that can make your stomach churn. One minute you could be way up, and the next you're wondering what just happened. That's the world of short-term crypto in a nutshell. High potential for quick gains, but also a very real possibility of significant losses just as fast. It's a high-stakes game that is definitely not for everyone, and it requires a certain mindset to even attempt. Because of this volatility, the number one rule, the golden rule, the rule you should write down and stick on your monitor, is this: only put in money you're okay with losing. Seriously, I'm not just saying that as a disclaimer. You have to go into this with the mindset that the money you invest could literally vanish tomorrow. This isn't your retirement fund or your emergency savings. This is speculative capital, money you've set aside for high-risk, high-reward plays. If the thought of losing that amount keeps you up at night, you've invested too much. It's about making calculated bets, not gambling away your financial security. With that very important warning out of the way, I know a lot of you are still interested in the potential here. The allure of a coin doubling or tripling in a short period is powerful. So if you're curious about which coins might jump up in price quickly, here are a few people are talking about right now as of June 2025. Remember, this is not financial advice, just an overview of what's currently trending in the market. Let's get into it, and make sure you smash the like button for the YouTube algorithm. It really helps the channel out, and it only takes a second. First up, let's look at a newer name that's been making some noise: Grass, or the Grass token. The reason this one is on the radar for short-term traders is because of a recent event that really shook things up. They just had a massive airdrop, which is basically a big giveaway of free tokens to early users and community members. This kind of event creates a huge amount of buzz and attention. Suddenly, thousands of people have this new token in their wallets, and a whole lot more are hearing about it for the first time. It's a powerful marketing tool that can really kickstart a project's visibility in a crowded market. This sudden influx of tokens and attention often leads to a massive spike in trading volume, and that's exactly what happened with Grass. The price shot up almost overnight as people who got the airdrop decided to sell for a quick profit, while new speculators, seeing the momentum, jumped in hoping to ride the wave higher. For a short-term trader, this volatility is exactly what you're looking for. It creates clear entry and exit opportunities in a very compressed time frame. The key here is understanding that this is event-driven trading. The spike is tied directly to the airdrop, and the price action can be just as quick on the way down once the initial hype fades. Next on the list is a fascinating one: Yearn Finance, with the ticker YFI. What makes YFI so interesting from a trading perspective isn't a new feature or a big partnership, but something much more fundamental: its supply. YFI has an extremely low total supply of tokens compared to almost every other major cryptocurrency out there. We're talking about a maximum supply of just 36,666 tokens. To put that in perspective, Bitcoin will have 21 million, and many other projects have billions or even trillions of tokens. This scarcity is the core of the short-term trading thesis for YFI. Because there are so few YFI tokens in existence, the laws of supply and demand are amplified. Think about it. When a wave of buying pressure comes into the market, it doesn't take a huge amount of capital to significantly move the price. There just aren't that many sellers available to meet the new demand. This can lead to explosive price movements in a very short period. A relatively small increase in interest can cause the price to squeeze upwards dramatically. For traders, this means that when YFI starts to get momentum, the moves can be incredibly powerful, but it also works in reverse, making it a very sharp double-edged sword. Now let's talk about Raydium, or Ray. To understand the potential here, you first have to understand the ecosystem it's built on: Solana. Raydium is an automated market maker, or AMM, and a decentralized exchange, or DEX, built on the Solana blockchain. Essentially, it's a platform where people can trade cryptocurrencies directly from their own wallets, and it's one of the most popular ones on Solana. This is a crucial point because the success of a platform like Raydium is directly tied to the success of the blockchain it lives on. It's like owning prime real estate in a rapidly growing city. And right now, Solana is that booming city. It's been gaining a massive amount of traction because it's known for being incredibly fast and having very low transaction fees, which is a huge advantage over Ethereum for many users. As more and more projects, meme coins, and users flock to the Solana network, they need a place to trade. Raydium is one of the primary destinations for that activity. So, when Solana is hot and trading volume is high, Raydium benefits directly. Short-term traders watch Ray because it acts as a leveraged bet on the entire Solana ecosystem's daily activity and hype. This next one is a bit different because it didn't start as a typical cryptocurrency. I'm talking about Pudgy Penguins, the Pengu coin. This project actually began its life as a very popular NFT collection. You know, the digital art pieces of cute, chubby penguins that took the internet by storm. The brand became so strong and the community around it so dedicated that they expanded, launching their own cryptocurrency. This is a fascinating new trend where a project builds a massive, loyal following first and then introduces a token to that pre-existing audience. The short-term trading angle here is all about that community. The Pudgy Penguins community is known for being incredibly active, passionate, and well-organized. When they decide to rally behind something, they can create significant buying pressure and social media buzz. For a trader, monitoring the sentiment and activity within the Pudgy Penguins Discord server or on Twitter can be a leading indicator of potential price moves. If a big announcement is coming or the community is building hype for an event, it could signal a short-term spike in the Pengu token's price. It's a trade based on social dynamics as much as it is on technicals. Alright, let's dive into the wild world of meme coins with SPX 6900 or SPX. Now you have to be extra careful with meme coins, but they are a huge part of short-term trading culture. What makes SPX stand out in this incredibly crowded space is its technical foundation. It's designed as a meme coin that works across different crypto systems, specifically utilizing Layer 0 technology. This means it's not just stuck on one blockchain like Ethereum or Solana. It has the potential to be traded and moved across multiple chains seamlessly. This is what we call omnichain. This cross-chain or omnichain capability is its main selling point and what gets traders interested. It opens up the coin to a much wider audience and to arbitrage opportunities between different exchanges on different blockchains. While the name and the culture around it are pure meme, the underlying tech gives it a narrative that's a bit more interesting than your average dog-themed coin. Traders are betting that this technical advantage could help it capture attention and liquidity from multiple ecosystems at once, leading to the kind of explosive, volatile price action that defines meme coin trading. It's a high-risk bet on a narrative taking hold. Of course, we have to talk about the king of them all, Bitcoin. It might seem strange to include Bitcoin in a list for short-term trading when everyone talks about it as a long-term store of value, but hear me out. Because Bitcoin is the largest and most well-known cryptocurrency, it has the most liquidity and the most traders watching it every single second of the day. This constant attention means that even small percentage moves in Bitcoin's price represent billions of dollars in value-changing hands, which creates enormous opportunities for traders. It's the most traded asset in the crypto world, period. The big price swings that Bitcoin is famous for are precisely what attract short-term traders. A 5% or 10% move in a single day, which is not uncommon for Bitcoin, can be a massive profit opportunity if you're on the right side of the trade, especially if you're using leverage. Furthermore, the entire crypto market tends to follow Bitcoin's lead. When Bitcoin pumps, altcoins tend to follow, and when it dumps, the whole market often sees red. So, for many short-term traders, simply trading Bitcoin is the purest way to bet on the direction of the entire crypto space without having to pick a specific smaller coin. Next up is the undisputed number 2, Ethereum, or ETH. If Bitcoin is digital gold, then Ethereum is, well, the decentralized world's digital infrastructure. It's the foundational layer upon which thousands of other projects are built. We're talking about decentralized finance applications, NFT marketplaces, blockchain games, and honestly, so much more. This widespread use, or utility, is what makes Ethereum so compelling. Its value isn't just based on speculation, it's actually tied to the real usage of its network. The more people use apps built on Ethereum, the more demand there is for ETH to pay for transaction fees, which are known as gas. For a short-term trader, this utility creates a different set of signals to watch. Major upgrades to the Ethereum network, like the move to proof of stake, can cause massive price movements. The launch of a wildly popular new application or a surge in NFT trading volume can lead to a spike in transaction fees, signaling high network demand and potentially driving the price of ETH up. Traders watch these on-chain metrics closely. They're not just trading the chart, they're actually trading the underlying activity of the most used smart contract platform in the world, making it a more fundamentally driven trade than, well, many others. We mentioned Solana earlier when we talked about Radium, but it absolutely deserves its own spot on this list. Solana's main claim to fame, and the reason it has generated so much excitement, is its incredible performance. It's designed to be one of the fastest and cheapest blockchains out there, capable of processing thousands of transactions per second for a fraction of a penny. This speed and low cost have made it a magnet for developers and users who are looking for an alternative to the slower, more expensive experience on other networks, particularly Ethereum during times of high congestion. This performance advantage makes Solana a hotbed for innovation and, you guessed it, speculation. New meme coins, DeFi projects, and NFT collections can launch and gain traction incredibly quickly on Solana because it's so cheap and easy for users to participate. For short-term traders, the Solana ecosystem is a target-rich environment. The price of SOL itself is highly sensitive to the hype cycle of its ecosystem. A new viral meme coin or a successful project launch on Solana can cause a surge in network activity and a corresponding spike in the price of SOL, as people need it to buy into these new opportunities. Now let's talk about BNB, which used to be known as Binance Coin. This coin is the native cryptocurrency of the entire Binance ecosystem. And when I say ecosystem, I mean it. Binance is the world's largest cryptocurrency exchange by trading volume, and BNB is deeply integrated into everything they do. Users can get trading fee discounts by holding BNB. They can use it to participate in new project launches on the Binance Launchpad, and it's the native currency of the BNB Smart Chain, which is another popular blockchain for decentralized applications. This deep integration with the world's biggest exchange gives BNB a powerful and consistent source of demand. For short-term traders, BNB's price is often closely tied to the fortunes and announcements of Binance itself. News about the exchange, a new high-profile project launching on their launchpad, or changes to their trading fee structure can all have an immediate impact on the price of BNB. It's a way to trade the success and activity of the biggest centralized player in the crypto space. When Binance is doing well and attracting users, there's a strong underlying bid for its native token. Last on our list today is a coin that has been around for a while and has a very specific and ambitious goal: XRP. The company behind XRP, Ripple, aims to revolutionize how money is sent across borders. Right now, international payments for banks and financial institutions can be slow, expensive, and complicated. Ripple's goal is to use XRP as a bridge currency to make these transactions happen in seconds for a fraction of the cost. The idea is that a bank in the US could convert dollars to XRP, send the XRP to a bank in Japan, which then converts it to yen, all in a matter of moments. The short-term trading narrative for XRP is almost entirely driven by news and developments related to this goal. This includes news about partnerships with banks, positive regulatory developments, or updates from their long-standing legal case with the SEC in the United States. These events can cause massive sudden moves in the price of XRP because they directly impact the probability of its core use case being adopted. Traders who follow XRP are constantly scouring the news for any hint of progress on the partnership or legal front, as a single positive headline can lead to a significant rally, making it a very news-driven asset to trade. So there you have it, a quick look at 10 coins that traders are watching for short-term opportunities. But I need to end this video with the same seriousness I started it with. This space is incredibly fast-moving. A coin that's popular today could be completely forgotten next month. That's why it is absolutely critical that you do not take this video as a shopping list. Crypto prices can change like lightning, so always do your own research. Look into the projects, understand why they might move, and form your own opinions before you ever risk a single dollar. Your financial education is your best defense. As you navigate these volatile markets, please keep a few key tips in mind. First, and I will say it one last time, never invest more than you can afford to lose. This is the bedrock of responsible speculation. Second, consider using tools like stop losses, which are automatic orders to sell a coin if it drops to a certain price, to help protect your downside. And third, try your absolute best to not let emotions drive your decisions. Trading based on fear or greed is the fastest way to lose money. Have a plan and stick to it. Finally, while my goal is to share information and explore what's happening in the market, I am not a financial advisor. The smartest thing you can do, especially when you're dealing with high-risk assets like these, is to talk to a qualified financial expert who can understand your personal situation and help you make decisions that are right for you. They can help you build a balanced portfolio and ensure you're not taking on more risk than you should. Thanks so much for watching. Smash the like button, subscribe for more